time you tune into Market Cafe with me, Ankita Saxena, and with me is Kanesh Sirkar. Good morning to everyone. In this show, we'll take you through what transpired in the global market, especially the Wall Street, and what's going to be the likely impact in Indian markets, or what are the trade setup or the cues to watch out for before the trading session on D3 starts. Let's take a look at how the US market panned out. Now, it was the first session for the last 7 in which the S&P 500 did not close at an all-time high, and the S&P 500 slid almost 0.3%, while Dow Jones and nasdaq lost almost 0.5% and 0.4% respectively. Now, the major averages were weighed down on Tuesday as the progress of US trade talks with China became rather shaky. Now, US negotiations ended discussions with Beijing, and the potential extension of a pause on higher China tariffs remains uncertain. Now, postponement of these higher rates won't be the final until Donald Trump signs off the plan. US negotiations are still going on. Investors are also awaiting Federal Reserve's interest rate announcement that will come in on Wednesday afternoon. And the move comes as the street is analyzing, earnings report and also awaiting Federal Reserve's interest rate decisions. So that's how the US market shaped up. We ended with cuts. Now remember, the potential talks on tariff with China is still on, and we also have the interest rates decision that will be coming out as of today. Meanwhile, as far as the stock-specific action is concerned, Starbucks shares climbed 4% after the coffee chain posted stronger than expected revenue for the third fiscal quarter. On the other hand, we had Visa also that sank more than 2% despite the quarterly results coming in better than what the Wall Street was expecting. Now, the street is awaiting, of course, like I said, for the interest rate announcement, and especially the commentary that the Fed will be coming out of, because we are expecting a rate cut that would be due perhaps sometime in the month of September. So that is something that the investors are waiting and watching out for. So it is largely priced in a 98% likelihood that the central bank is keeping the key interest rates within the range of 4.25 to 4.5%. So that's what we are watching out for, a major Fed decision that will be coming out. The earnings front, that is what, and of course, the China and US deal, that's something that we are watching out for as far as Wall Street is concerned. But let me bring on board my colleague Kanishka, who's joining us with how the crude is faring. Kanishka, in the last 2 sessions, we've seen a jump up coming in crude prices as well.
Right, Ankita. Very good morning to you, first of all. Now, if you take a look at the commodity markets, now oil prices have seen a big jump. In fact, it surged over 3% yesterday, with Brent settling at that $72.5 level, and WTI that settled at the $69.21 level. These are both at their record levels since June 20th. Now, this rally was driven by US President Donald Trump threatening new tariffs on Russia in 10 days unless it moves to end the Ukraine war. Meanwhile, US-China talks, as you earlier pointed out, have sort of cooled off trade war fears. Though Treasury Secretary Bessent, he has warned that Beijing over Russian oil imports. Now, optimism around US and EU trade agreement that also supported the sentiment for oil, avoiding a broader trade war. Meanwhile, the deal includes ambitious energy and investment targets. So that's something that's supporting the oil market. Well, now, as you rightly pointed out earlier, markets are now awaiting the US Fed's policy outcome with expectations of a dovish tone. Let's also talk about gold prices then. Now, they have edged up about 0.5% higher to that $3,327 level yesterday, as investors stayed cautious ahead of the US-China trade talks and the Fed policy decision. Now, while the recent US deals with the EU and Japan, they've eased trade fears, as I mentioned earlier, China talks remain tricky, and that's something that the street is watching out for. Meanwhile, the Fed, of course, is expected to hold rates steady, but markets are closely watching on the hints for future cuts. So